everyone. What is the tax on voluntary disclosure imposed under the Part 1 of Finance Act number 18 of 2021? These proposals came in the Act as a result of the budget proposals 2021. According to the budget proposal 2021, there was a proposal expecting taxpayers who have not correctly declared their income or assets, and the budget proposal expected to invest their money in the relevant businesses or certain provided investments, subject to the payment of 1% tax to receive this tax pardon. So that is the basic reason to introduce this type of tax on voluntary disclosure and to grant certain tax immunities under the Finance Act. First, we'll see who are the people eligible to provide a declaration under this law. First, the tax has been imposed to the persons who are having undisclosed taxable supply, undisclosed income or asset which required to disclose under the provisions of all Inland Revenue Act. I mean, all Inland Revenue Act means the prevailing Inland Revenue Act is Act number 24 of 2017, and before that we have repealed Act in 2006 and 2000 and 1979. So under all tax in all Inland Revenue Act, if any person has to disclose any income or asset, and the income is eligible to come into the system. Sorry for the technical problem. We'll start from the last part that I have explained. Accordingly, if you have provisions, so you also basically qualifying to come under this scheme. But other provisions are in operation, so you have to check whether you are eligible to disclose according to those provisions. We'll see what are those provisions in my presentation. So taxable supply, the meaning of the taxable supply we are taking from the Value Added Tax Act number 14 of 2002. And for the purpose of definition of income, the Act provided the meaning as any gain, profit, or receipt derived from any source is as, if you are having undisclosed income, asset, or taxable supply, you can participate to this scheme and get the immunity subject to the other provisions. There is a period provided by the Part 1 of Finance Act number 18 of 2021. That period is up to the year of assessment 2019-24 income tax purpose, and for value added tax purpose relevant is the date ending on 31st March 2020. So the quarter or month ending 31st March 2020, up to that period you can seek immunities by declaring your undisclosed income, asset, or taxable supply. Thereafter, you can't seek immunity. So I mean, if you are having, which should require to disclose under for year of assessment 2020-21, or for any quarters commencing from the date of 1st April 2020, you have to declare it. Up to the date of 31st March 2020, you can seek immunities under this Act or the Part 1 of the Finance Act number 18 of 2021. So they are the immunities granted and required to participate by a person for this Act. And Act says the definition of person should be obtained from the definitions given under the Inland Revenue Act number 24 of 2017. So, Inland Revenue Act number 2017 covered each and every person. I mean, there may be individuals, there may be there are partnerships and other clubs, societies, those type of entities are also included under the definition of person. Therefore, any person who is having undisclosed taxable supply, income or asset are basically qualifying to declare for this tax subject to the other provisions. So those are the qualifying people, and according to the provision, few person has excluded to seek immunities from this part 1 of Finance Act number 18 of 2021. Those people includes people who have who are under investigation or under any legal proceedings are pending for them or convicted of an offense for them, they can't participate or to declare their undisclosed supply, taxable supply, income or asset under this act. So if any person committed an offense or the relevant authority has taken legal proceedings and the legal proceedings are pending or they are under investigation according to those act, they can't declare anything under this provision and cannot seek immunities provided by this part 1 of Finance Act number 18 of 2021. So those acts have been mentioned under the Finance Act includes Prevention of Money Laundering Act number 5 of 2006, Convention on the Suppression of Terrorist Finance Act number 25 of 2005, Bribery Act, Conventions Against Illicit Traffic in Narcotic Drugs and Psychotropic Substance Act number 1 of 2008. So if any person are under investigation or legal proceedings are pending or convicted an offense according to these 4 acts, they can't declare anything for under this act and cannot seek immunities for tax purpose. They have been excluded from the act. In addition to those people, certain amounts have also been excluded. That is include amounts considered by the Commissioner General to make assessment before the date of implementation of the Act. The date of implementation of the Act is on September 2021. So, if any amount considered by the Commissioner General to make any assessment under the provisions of Inland Revenue Acts, including 2017 and all repealed Act, and Value Added Tax Act number 14 of 2002. There it covers betting and gaming acts and stamp duty acts too. So if any amount considered for assessment, that amount you can't seek immunity. For that amount you can't seek immunity. You can declare the balance amounts. Further, if you have collected VAT from your customers, that for that amount also you can't seek immunity. The immunity will not be granted for that amount. So, for an example, if you are having undisclosed income for a particular year of assessment, say during the year of assessment 2017-18, you didn't declare your income properly for income tax purpose. Accordingly, you are having rupees 10 million amount of cash which was not declared to the Commissioner General in your returns. Say you are having 10 million, but during the period before before the implementation date of this act or 15 September 2021, before that period, Inland Revenue Officer found certain issues and he was made assessment for an amount of rupees 3 million. So that 3 million amount you can't declare, but you are the person who really properly know the amount that you have to declare and what is the amount that you have not disclosed for tax purpose. So in this case, you are having 10 million, but department has considered only 3 million. Still, you are having 7 million which was not disclosed to the Commissioner General through your returns for up to the period of 2019-20. So that 7 million you can still disclose for this purpose by complying with other requirements and can seek immunity for this 7 million. So that is the amount that you can disclose under this situation. Now, as I explained, those are the people who qualify to declare, and those are the amounts that you can declare. In order to seek immunity, there are certain statutory requirements provided by this Act. So those requirements I have categorized under 4 headings and will be discussed in my presentation. So there are 4 items. One is investment requirement. In order to get the immunity, you have to do some investment or do some deposits. As I explained at the beginning of my presentation, the budget proposal also expecting to invest hidden money in the relevant investments. Therefore, investment requirement have been provided by the Finance Act number 18 of 2021 to grant this tax pardon. First one is investment requirement. The second one is you have to calculate the 1% tax. So the second requirement is based on the investment or deposit, you have to calculate what is the due tax amount to receive these immunities. That is the second item I have identified. Third one is payment of tax. Once you calculated your tax correctly, you can make the payment as required by this law. And then fourth requirement is providing a declaration to the Commissioner General seeking immunities under this Act. So those are the 4 requirements which you are required to comply to get this immunity. And to investment purposes and for declaration purposes, the definitions provided by the acts are important. So I am going to discuss about those definitions because you can declare undisclosed taxable supply, undisclosed income or asset, and you have to invest movable or immovable properties. So it's important to identify what is the meaning assigned by the Act for the term asset and what is the meaning available for immovable property and movable property. Asset defined as asset means money or any immovable or movable property. So it includes movable property, immovable property and money. And in order to further, it says including bank balances, financial instruments, shares, derivatives, treasury bills, fixed deposit, time deposit, bonds, or other form of deposits, money given by way of security or loans, cash, gem or gold in hand, any other monetary right. So those are actually included under the term asset. It includes intangible asset purchased from a third party, from another party. It does not include any intangible asset created from your side. Say goodwill. If goodwill is a goodwill created by you through from your business, so you can't declare goodwill for this purpose. But if you have purchased any trade name from another party, there you are having an asset, so that asset you can declare subject to the provisions of this part 1. Money defined as local currency and foreign currency, whether retained in Sri Lanka or abroad, and those money you can invest or deposit subject to the provisions of this act. Movable properties includes all forms of movable property in Sri Lanka or abroad, including gold, but does not include money. So under the term money, movable property, you can't include money. Immovable property, there the act provides only an inclusive definition, so it's not a restricted one. It's therefore uh, specifically says any building in Sri Lanka or abroad, whether constructed or under construction, qualifies as immovable property. But it does not mention land as an immovable according to the general term, and consider it as an immovable property. Then I am moving to the investment requirement. First statutory requirement, which I have understood. In investment requirement, there are two things that you have to consider. First one is you may have undisclosed undisclosed taxable supply, undisclosed income, or undisclosed asset. At the date of implementation of this act, that is on September 15, 2021, you may have money which representing those undisclosed taxable supply, income, or asset. So those amount you have to invest on provided investment method by the act. So section 3 of part 1, it says if you are having money, you have to invest or deposit as required by the part 1 of Finance Act number 18 of 2021 before the date of 30th March 2022. If you are seeking immunity, you have to disclose all the things and should comply for statutory requirement before the date of 31st March 2022. Therefore, if you are having money, that investment must be completed, investment requirements must be completed before the date of 30th March 2022. So if if you are having money, you are provided certain investment method. First one includes shares issued by a resident company. You can you are freely can invest your undisclosed in taxable supply income which is available as at the date of September 15 in money on shares issued by a resident company. And the second investment method is treasury bills, treasury bonds issued by the Central Bank of Sri Lanka on behalf of the government of Sri Lanka. So you can invest on treasury bills and treasury bonds as well. Third investment requirement, investment method provided by the Act is quoted debt securities issued by a resident company in Sri Lanka. There are certain debt instruments transacted in Colombo Stock Exchange. You can purchase those debt securities to meet this investment requirement. Fourth item is any movable or immovable property in Sri Lanka. So if we are having money as at the date of September 15, definitely you can, if you are not going for first three investment method, the balance method provided, the next method provided is you can purchase movable or immovable property in Sri Lanka, you can't buy movable or immovable property outside Sri Lanka. So that is also an important one. You can buy any movable property or immovable property in Sri Lanka. So that's why I have explained what is the meaning of movable property and immovable property. If you are not in a position to go for these four investment method, the next method suggested by the Act is you can deposit your money in a bank account in Sri Lanka on or before the date of March 30th, 2022. In order to say that this bank account in Sri Lanka, the the Act define what is the meaning of bank account. It says bank accounts means any bank account opened and maintained by a declarant in a bank license under the Banking Act number 30th of 1988. So there are certain licensed commercial banks and specialized bank. So you can open a bank account payment, deposit your money available in September 15, 2021 to meet this investment requirement. The second one is as at the date of September 15, you may have already invested your money in those type of investment method. So you don't want to change your investment if you have already done it before the date of implementation of this act. Say if you have already purchased shares issued by a resident company, or if you have purchased treasury bills or treasury bonds issued by the central bank on behalf of the government of Sri Lanka, any quoted debt securities issued by a resident company in Sri Lanka through the Colombo Stock Exchange or through initial issuing method. If not, there may be certain movable or immovable properties purchased whether in Sri Lanka or outside Sri Lanka. You can declare the same investment without changing. And can deposit if you are having amounts deposited in a bank account, you can declare the same amount. As I explained, bank account means always bank account in Sri Lanka. Say if any person is having undisclosed amount as at September 15, 2021 in a foreign bank account, then that person has to remit the relevant money to Sri Lanka and then can deposit in a Sri Lanka bank account, as I said. If any person is having movable or immovable property already purchased before September 15, 2021 outside Sri Lanka, then those immovable properties, they can disclose for this purpose without realizing those assets or without realizing those properties. So those are the investment requirements which you have to fulfill. Certain important points in respect of investment requirements I have mentioned here. Most of the part I have covered. First and second conditions I have covered. Third one is also a matter for most of the taxpayers. Uh, According to the investment requirement, if you are having money, you are having an option to do certain investment, and the final method provided by the Act is to deposit your money in a bank account. If you are not willing to go for another investment method like investing in shares, treasury bills, or to purchase any mobile or immobile property, you can deposit your money in a bank account. So when you are depositing your money in a bank account, there are certain Central Bank of Sri Lanka provided certain regulations and or directives. So those directives are applicable for this purpose. without any change. But when you are depositing your money, you can put this phrase in your deposit slip saying deposit is made under the Finance Act number 18 of 2021. So you can put that in a deposit slip. Anyway, regulations of central bank are applicable for those deposits. But for other investment methods, these type of things may not applicable. I mean, to purchase other movable or immobile properties according to the section 3 provided by this part 1 of Finance Act number 18 of 2021. So other parts I have already explained. Now I am moving to the second statutory requirement of this part 1, that is calculation of tax. So once you completed your investments or deposits, you have to compute the due tax to comply for this part 1. There are two methods provided. One is tax on voluntary disclosure can be calculated based on the cost of asset invested or deposited by using any undisclosed taxable supply, income or asset other than immovable or movable property. So there, if you are considering your deposits or money, you can consider the amount and then can calculate 1% of tax on the relevant asset. But for all other movable and immovable properties, you have to obtain the market value of those movable and immovable property on the date of declaration. But it doesn't matter whether it is on date of declaration or closer date. I mean, say, if you are going to provide your the declaration on tomorrow, you can obtain market value for a closer date. Therefore, all movable and immovable property, you have to obtain the market value, and then on the market value, 1% of tax has to be calculated. No refund will be considered, and for income tax purpose, it will not be considered as a tax credit. The payment of this is not a deductible expenditure for income tax. Attention is required for this matter. Before making the 1% tax, first you have to correctly identify whether you are eligible to disclose your undisclosed taxable supplies, undisclosed income or asset to receive this immunity, whether you can fulfill the investment or deposit requirements correctly, and then can obtain the market value, and thereafter you can make the payment and seek immunity. So if in any case, if you have make the payment and if you are not eligible to get this immunity, you can't obtain refunds for the payment, or you can't ask from Commissioner General to consider it as a tax credit or to allow that payment as an expenditure because of the provisions of this act. Now the third requirement is for payment of tax. Once you computed your 1% tax correctly, you have to make that payment to the Commissioner General. For that purpose, Commissioner General has issued guidelines under the powers given by this law. Accordingly, there may be taxpayers who seeking immunities under this act who have already registered with the Commissioner General, and there may be taxpayers taxpayer have not registered with the Commissioner General. If you have registered with the Commissioner General, no matter, you can use your already obtained TIN and then can make this payment. If you have not obtained a TIN before this declaration, then you have to obtain a TIN from the Commissioner General using using the methods provided by our guideline. The easiest method is submit your TIN application through the web portal. You can log into the IRD web portal www.ird.gov.lk, and there you can find e-service, access to e-service and taxpayer registration path you can follow, and there then you can find the tax registration forms and can fill those forms, and then you can send it to the department and get the TIN number. Other than that, if you are wish to come to the department and get the TIN certificate, you can get it by coming to the Inland Revenue Head Office or to the Inland Revenue Regional Office and can get the TIN number easily. But for this purpose, if you are willing to give the income source that you are having, you are free to declare it. If not, especially for individuals, in individual application form, there is a space provided in the application saying you have to mention your income source for tax registration, TIN registration. In that form, you can use you can put a tick in other column, because if you are not willing to provide the source of income for this purpose. And there are tax type registrations also according to the revenue registration procedure. If you are liable to provide the income tax return here in apt, I mean from the year of 2020-21 onwards, if you are liable to provide your income tax return according to the section 102 of the Inland Revenue Act number 24 of 2017, or if you are a person who has to be registered for Value Added Tax Act number 14 of 2002, then you can register for those tax types. If not, you can ignore the tax type registration. So now you have obtained a new TIN number, or you are having already obtained TIN number. By using that TIN number, you can make the payment through the normal Inland Revenue Department payment paying in slip. So in that paying in slip, there are certain information you have to mention. First one is for this tax type code is 28, payment period code is 22,000, payment category is S, payment voucher code you don't want to fill, and the all other information includes your names, addresses, the amount that you are making. So those information you have to fill in the normal paying in slip. Paying in slips are already handed over to all BOC branches and the Bank of Ceylon office available in the Revenue Head Office. You can ask from them to provide a tax paying slip and use those paying in slip and make your payment. If not, you can collect paying in slip from the department as well, and then use those paying in slip. Anyway, this tax is available only for a limited time. Therefore, this payment is handling through a manual procedure. Therefore, auto payment system is not applicable. There you can't use auto payment method to make this payment. Definitely, you have to obtain the paying in slip and can pay only to the Bank of Ceylon branches. If you are declaring any foreign currency amount, say if you are going to declare foreign bank accounts after depositing in Sri Lanka, then you have to convert the foreign currency into Sri Lankan rupees by using the buying rate available at that date, and can pay 1% amount of tax. So up to now, these statutory requirement we have disclosed. We have discussed. First one is the person eligible to disclose under this act is person who has undisclosed taxable supplies, undisclosed income or assets required to declare under the Revenue Act or Value Added Tax Act for periods before 31st March 2020. So those are the qualifying period, other excluding the people who have come under the investigation or pending decision or convicted an offense for the 4 acts I have mentioned. And those people have to invest or deposit, as I explained, they are undisclosed in taxable supply, income or asset, have to deposited or invested as required by the law. Then the third requirement is calculate the tax payment and make the tax on voluntary payment disclosure. And after all these requirements are met, they can disclose, they can declare declaration in 2 formats. One is for individual declarants and the other one is for entity declarants. So they are the people who can seek immunities under this act. Say if you, even though if you are having undisclosed income, if you are not in a position to invest your undisclosed income as provided by this act, you can't seek immunity because you can't comply with the investment requirement and cannot make the tax payment. So that has to be recognized. Even though if you are having undisclosed income or taxable supplies, definitely you should comply with the investment or deposit requirement and then have to pay the tax, and those are the people who can provide the declaration to the Commissioner General seeking immunity. Now the 4th requirement we can consider the declaration requirement. Last date to submit the declaration is on 31st March 2022. And according to the statutory requirement, when you are providing your declaration, you have to attach documents to prove the ownership of the asset, date of acquisition of the asset, and cost or market value of the asset. So those 3 aspects you have to highly recognize in order to prove the ownership, date of acquisition, cost or market value. You should provide acceptable documents to Commissioner General with your declaration as a statutory requirement. The power has been granted to Commissioner General to issue a guideline, make clarifying manner of payment and filing the declarations. We have already discussed the manner of filing, manner of payment. Now we'll see the filing of declaration. The Act itself provided 2 types of declaration formats to this declaration purposes. The department has prepared those declaration in with relevant format and published in our website. You are eligible to download those declaration formats and can fill those things. If not, you can prepare your declaration forms according to the way that the act has provided. But for your easy reference, the department has already prepared it to fill all the details. I think it's easy for you to download those forms and use those forms. The second requirement as I explained, you have to provide authentic documents to prove the ownership of the asset, date of acquisition of the asset, cost or market value of the asset. So those documents must be attached, and additionally, in order to prove your payment, you have to attach a copy of paying in slip after the payment and certified copy of national identity card or passport copy. And there are some declarants who are willing to obtain their communication letters issued by the Commissioner General to different address. I mean, there are people who are doing businesses in a separate place, but their registration address is in a different place. So in that case, you can ask by providing a separate letter stating to deliver all the communication in this regard to the specified address in your letter. So accordingly, the department will provide all the acceptance letters or rejection letters to the address mentioned in your letter. So you can provide that type of letter. In order to prove the ownership, acquisition date, cost or market value, the department, the Commissioner General's declaration certain example, because the department has not limited those documents into the items mentioned under here. If you are in a position to prove by way of another document which can be accepted by the Commissioner General, you are having that right. So first one is for in most of the cases for immovable properties, you can provide copies of deeds, and for other assets, you can provide copies of the bills or invoices. For deposit certificate, share certificate, confirmation issued by the relevant banks, financial institutions, or other institutions. I mean, say for purchase of shares, you can confirm through your reports issued by the share broker. So if they certifying it, we can accept it. Confirmation issued by the relevant debtor. Say if you are having trade debtor or any other debtor, confirmation from the debtor you have to submit. Confirmation of an auditor for to declare the trade data, trading stock. I mean, for if you are having undisclosed trading stock, you have to provide a confirmation from an auditor for this purpose. In order to prove the market value, you can you can provide a valuation report issued by the qualified valuer, and for the same case, if the property has been valued for insurance purpose, that insurance report also can provide. Valuation reports issued by the government institutions or independent bodies are also accepting, especially for gems and jewelries. You can ask a report from a National Gem and Jewelry Authority and provide the same for this purpose. Then after you prepare your declaration correctly by with these documents, these 4 type of documents, you can submit your declaration only to the Commissioner Secretariat Branch, Unit Secretariat Branch, 14th floor, Inner Revenue Department, Head Office, if you are going to deliver it by hand. If not, you can provide your declaration with these documents in a registered post mail. You can't hand over these documents to any regional office or any other place, or you cannot email your declarations and forms to Commissioner General. Definitely, you can use only these 2 methods. One is submit your declaration forms to the Commissioner General through registered post. If not, you can hand deliver your documents to the Secretariat branch of the Inland Revenue Department head office. Now, after you submit your declaration forms, your duty is over. Now, there is a duty to the Commissioner General to perform in accepting your declaration. We'll see what are the duties performing by the Commissioner General. First one is the main duty provided by the Act. The Commissioner General has to see whether your declaration is in accordance with the provisions of the Finance Part 1 of Finance Act number 18 of 2021. So what we are doing is we are checking only whether the declarant has fulfilled all statutory requirement of the Act. That is the duty assigned to the Commissioner General. If you have correctly complied with the law as I explained up to now, then you are entitled to receive this immunity. So in order to prove the documents, I mean to prove the ownership, date of acquisition, cost of market value is also a statutory requirement. So if you have not fulfilled it, your declaration may not accept. If you have correctly fulfilled it, the Commissioner General has to accept it. Then, if you have complied all the statutory requirements correctly, Commissioner General has to accept your declaration within 30 days of the receipt of your declaration. And if you have not fulfilled correctly, the Commissioner General has to inform reason to reject your declaration. If there's any reason to reject your declaration, Commissioner General has to inform to the declarant stating why he is not why he is rejecting your declaration, and based on his reason you can provide a fresh declaration remedying the defects in the rejected declaration. See, if you have not complied correctly, Commissioner General can issue a letter stating due to these reasons your declaration has not been accepted. But based on those reasons, you are free to provide a fresh declaration to the Commissioner General, and then Commissioner General will issue an acceptance letter after you fulfill the requirements. If in any case, if the Commissioner General has not communicated to declarant stating your declaration is not accepted or accepted, automatically you will receive that acceptance, because Act says your declaration has been accepted by the Commissioner General. There is a deeming provision stating your declaration has been accepted and you are entitled for the immunities granted by this Act. So this declaration has to be a correct one, and if there's any false or incorrect information in the declaration, immunities granted through this Act will not be allowed. So correct declaration has to be submitted to receive these immunities. Now what we can see, what are the immunities granted through this Act. First one is, as I said, you are declaring whatever the taxable supplies, income or assets earned before 31st March 2020 to seek this immunity. Therefore, immunity is granted for income tax purpose and VAT purpose. For income tax purpose, up to the year of assessment 2019-20, the Commissioner General is not going to investigate your income or asset which representing the amount you declared, and no tax or penalty will be imposed, including interest, and no prosecution action will be taken for your amounts that declared in your declaration. Say if you have declared only part, the balance part will not cover through this immunity, because it says up to the income or asset disclosed in the declaration, you are entitled for this immunity. Same way for VAT purpose also, up to the taxable supplies disclosed in the declaration in relation to taxable period up to March 31st, 2020, you can seek immunity by fulfilling the requirements of the part 1. So in any case, if the taxpayer, if the declarant has collected VAT from customers, for the collected VAT amount, immunity will not be granted. But for other purpose, say for same amount, they have not paid income tax, but VAT has been collected, they can seek immunity for income tax purpose, but not for the VAT amount collected from the customers through the registration forms, registration through the VAT registration issued by the Commissioner General. So in order to receive these immunities, there may be taxpayers who have not registered for those taxes. There may be taxpayers who have provided returns for VAT purpose or income tax purpose. They can comply with this law and can seek immunity subject to the provisions as I have explained. There is an secrecy provision. There is a secrecy provision provided for this act. It says official secrecy has to be maintained by the Commissioner General, and we cannot provide any information to identify the declarant for any purpose. And there is a official secrecy provision available in section 100 of the Inland Revenue Act number 24 of 2017, and penal provision is also there if any official secrecy purpose has not complied by an Inland Revenue official or any other official. So all those provisions are applicable for part 1 of the Finance Act number 18 of 2021. So you can understand through our explanatory note published in our website and through our Inland Revenue guideline, the Commissioner General's guideline. The department has taken all the steps to protect your secrecy and to protect the information that you are going to declare in your declaration forms. If any person has not complied with this act, and even after that, even he has undisclosed income, taxable supply or asset, normally for those people, in the Revenue Act provisions, VAT Act, BNGO, Stamp Duty Act provisions will apply, and they may liable for income tax assessments, penalties, interest. They may liable if they have not complied with this law and not obtained immunities granted under this act. So before that, before this Finance Act number 18 of 2021, there was a Tax Amnesty Act administrated in 2004. So if any taxpayer who has declared for that purpose, they can come into this scheme as well. If they are having anything declared for 2004 Act, they can comply with this law as well and can declare their undisclosed income, taxable supply or assets subject to the conditions as I have explained. So those are the provisions available in the Act. Additionally, we have provided certain answers through our explanatory published in our Act for practical issues raised by the taxpayers after the Finance Act is came into operation. Accordingly, there may be taxpayers who undisclosed asset obtained through the finance lease agreement. So, under finance lease agreement, the lessee is not having the legal ownership. So, if any lessee have acquired an asset through a finance lease agreement, then amount paid up to the date of 31st March 2020 can declare as his asset. For that purpose, they can obtain a confirmation from the lessor, and with the copy of lease agreement and that confirmation, you can declare the undisclosed amount up to the date of 31st March 2020. Say if your lease agreement is over after that date, you are having the right of the asset. So in that case, you can declare the market value of the asset. But still, if you have not settled all lease payment, you can obtain a confirmation from them and disclose it. The other assets, how you all can prove it, I have already explained. In order to prove the ownership, date of acquisition, cost or market value, you have to provide documents, as I have already explained. If you are having foreign assets, you have to provide market value of the asset. In that case, you can obtain valuation from the relevant country where your asset is available, and that valuation you can obtain from foreign currencies and can convert into the Sri Lankan rupees using buying rate published for foreign exchange rate. Now, additionally, the department has instructed to disclose your undisclosed taxable supply or assets in a subsequent returns, because now you seeking immunities for undisclosed assets, and thereafter you have to comply with the law from the date of 1st April 2020. Accordingly, you may worried about the entries that you can pass in your account. So how you can disclose your assets in a subsequent return. So we have provided guidance. You can account the value of the asset in this way by debiting asset account, relevant asset account, and credit to the retained earnings. Since you have already finalized the income tax calculation for 2020-21, this has to be done for 21-22 accounts or for returns. There are cases where the taxpayer not disclosed asset together with any connected liability accounts. I mean, say a person has purchased an asset by using a loan, and that loan also not disclosed for tax purpose, and the asset also not disclosed. In that case, you can debit the relevant value to the asset account and credit the due liability to the loan account, and the difference you can credit to the retained earning accounts. In this case, what we wanted to explain is you can increase liabilities accounts, but you are not allowed to reduce liabilities accounts through these accounting entries. There are individual taxpayers who are not preparing balance sheet according to the nature of income. I mean, say they may derive the investment type of receipts. So in that case, they may not prepare any balance sheet. For them, what they can do is they can simply declare their undisclosed assets or undisclosed liabilities in the statement of assets and liabilities which you are going to submit with your return of income for year of assessment 2021-22. So those are the methods suggested by the Department of Inland Revenue through our explanatory notes. So those are the things that I have to explain under the part 1 of Finance Act number 18 of 2021 in order to get the immunities granted by this part and to make the tax on voluntary disclosure imposed by this act. You have to comply with these statutory requirements as I explained. Thank you very much. If you are having questions, you can put those things into the chat box and then we can provide the answer.
Yeah, good morning to the audience. I am here, the Commissioner, Mr. Nafil. The first question is, in the case of stock, who should value the stock? I think that was said in the presentation of Mr. Nihal Vijayawardena, that is by an approved accountant. So approved accountant in the sense, it could be a chartered accountant or any person who approved for the purpose of accounting. Then there's another question posed: if a person declare 1 million cash, the source is trading profit, will he be liable to VAT on the sale and income tax for profit? Now the trading part, if that trading is liable for VAT, if that particular person registered for VAT, right, there should be two conditions must be fulfilled. His supply should be liable for VAT, that is one. The second one, he should be registered for VAT. Then he has a taxable supply. Then in that scenario, the taxable supply must be declared to get exemption from VAT if the VAT is not collected from the customers. Right? So if that conditions are not met, that means he has no, either he has not registered or he has not doing any taxable supply. That sort of turnover or supply no need to be declared under as taxable supply. Then the second question is whether it's liable for IT. IT in the sense, income tax in the sense that ultimate profit is liable for income tax. That income must be an asset. And that asset should be declared under the amnesty. Then if it is declared, the amount to the extent what is declared in the declaration, the person who declared is get immunity from the income tax also. Then the third question posed, can we disclose only investment without supply and source? As I said earlier, if he has a taxable supply, he has to declare to get immunity from the VAT. And the second one is the source. If he wish, he can say the source of income, or if he is not willing to disclose the source, no need to disclose. But he has to declare ultimate asset or the income what is have in his hand. The third question is, when deposit some amount in a bank account as disclosed asset, are there any minimum time period to keep it same in that account? Once you see the law carefully, it says if any cash in hand should be invested in a way given in the act. But if any person is not in a position to invest that money as prescribed in the act, he can deposit that money to a bank and declare that amount. There is no any minimum period is given to how long it is be kept in a bank account. So once you are putting that amount in an FD, that also considered as an investment, or in a real property or any asset, that also will be considered. as an investment. So minimum period of keeping the money in a bank account not set. So anyhow, whatever the amount invested or deposited to bank either should be in a investment form in a bank, or subsequently that should be invested in any asset, right? But that should be shown in the subsequent balance sheet or assets and liabilities statement of that particular person, right? Then there's another question posed. When we disclosed as taxable supply for VAT, whether it is formed part of undisclosed income as per the Income Tax Act, hence need to be disclosed simultaneously. Right. Now, to get amnesty from the taxable supply, that supply should be shown as I already said. Then ultimately the result of taxable supply will be an asset, could be an asset or a profit, right? So once this mega one is declared, that means taxable supply, and the resultant of that taxable supply is an asset, I think that is covered under the taxable supply. No need to pay double tax of 1%. But for that
Yes,
purpose,
sir.
he
Yes,
should prove in a separate sheet clearly what is taxable supply, how it is subsequently invested. If it is invested, what sort of investment? That could be an stock or a physical asset, right?
yes,
Yes,
sir.
Sonia, you try to tell
Yes.
something.
Yes, when you are filling the declaration, you will understand in which way you have to declare, because in declaration it does not separate what is the amount of undisclosed taxable supply or income. There you have to disclose only the investment amount. So investment amount, based on the investment amount, you have to make the tax payment, and immunity will be granted as provided by that. So there's no simultaneous requirement for that.
Yes. Then the other question, if a person made part payment to the household apartment as at 31st March 2020, how he can disclose this under immunity? So for this question, I think that might be replied in the presentation. So
Yes.
what to the extent what is paid as an advance could be accounted as an undisclosed part as at 31st March 2020. For that, you have to pay 1% because the particular declarant didn't get the ownership, outright ownership of that particular apartment. Okay?
Yes, he can obtain a confirmation from the person who is
The real property owner.
Yes, and then same way as we have explained for finance lease purpose, this also taxpayer can ask for a confirmation and then can declare for this purpose.
Yeah, another question posed, if a person invested in fixed deposit after 15/9/2021, do he need to mention the source of fund detail he received in the voluntary disclosure declaration form item number 2? Please explain. So whatever the information requested in the disclosure form, you have to give. Beyond that, no need to give. So it source is not asked in that particular form, right? Then where there is a undisclosed taxable supply, can any amount can be considered as an investment requirement on that pay the tax, or else even net loss occurred with regard to undisclosed supply, whether disregard the investment requirement and the tax on that. So first here two things are there as I explained earlier. One is exemption, immunity from the VAT. The second one is immunity from the income tax. So for both, no need to pay separately 1% tax. We have to keep in mind that one. Then you have to pay 1%. Either on the top figure, that is the taxable supply. once you declared or pay the 1% on the top figure, taxable supply on the top figure, then the bottom figure also automatically included under that. Right? So the loss or profit is not a matter in this scenario. Right? So this again you have to keep in mind the what is called, if the VAT is collected as per the view of the IRD, if the VAT is collected on that part, even if you declare that taxable supply, the immunity no longer will be there to the part for the amount what you have collected as VAT. So you have to pay the VAT first to the collected part. If there is any balance and taxable supply only, you have to declare that under amnesty and pay the 1% tax. If a person has an asset purchased after, another question, if a person has an asset purchased after 31st March 2020 by using the money earned and undisclosed before 31st March 2020, what is the situation under this act? Yes, the money earned, that means the balance was as at 31st March 2020. Now only you are going to invest that money in an asset. Okay, you can come under the amnesty by declaring that particular asset, but you have to pay 1% on the market value as at the date of declaration or closer date of the declaration. Okay, continue.
Yes. If a person invested in fixed deposit after September 15, 2021, do he need to mention the source of fund detail he received in the voluntary disclosure declaration form item number 2? So there it says type of taxable supply, income or asset you have to mention, but in most cases you are declaring the asset. So type of asset you have to mention. I mean, say it's land, building, motor vehicle, likewise you have to mention, but practically you don't want to mention the type of taxable supply. I mean, say you are supplied this type of service, this type of goods, likewise you don't want to mention, because 1% tax you are making based on the investment. So accordingly, type of the asset you have to mention under
Another question is posed repeatedly. They are asking the same issue on taxable supply, how to declare the taxable supply. Here the question is, if undisclosed taxable supply is rupees 50 million, what would be the amount to be invested? Please explain. Yes, the taxable undisclosed taxable supply. First, you have, there's a few tests you have to do. Then what is that? Undisclosed amount of the undisclosed taxable supply, you have to calculate that amount on your taxable period basis. That is first. For every period, you have to find what is the amount of taxable period. The second test is whether you have charged VAT or not. If you are a registered person and if you're doing a taxable supply, then most probably you might have charged them taxable supply. In that scenario, until you pay the taxable the VAT amount, and to the extent of the taxable supply for which you have collected VAT, there is no immunity for that. If there is any part excess over that, right? But in the case of registered person and who supplies a taxable supply, there is no possibility without being without collecting the tax to charge to make taxable supply without collecting the VAT. So most probably it is VAT collected. So to that extent, there is no any immunity will be given. But in the case of a person, in fact, we will say, let's say that he didn't collect the VAT by any means. That means we apply sometimes the inclusive method, if the VAT is collected in the case where the commercial invoice is issued. Let's say he has not collected, in fact, as you said. Then he has to declare the amount of taxable supply, as you said in the example, 50 million. Then whether it's to be invested, yes, that is to be invested prior to 15 September 2020. In a different way, you can invest it. That means the investment could be either it's a purchase, either it could be a purchase for the subsequent period. That means you have invested on the stocks, or he could be invested that amount in any other assets. So that asset. So the asset here, investment criteria is either it should be invested in a trading stock or in any other stock, or it could be kept as in the form of money, right? So if in the form of money, that also could be deposited to a bank, right? Even after 15 September 2021. So that is the way of investing. But it's clearly, I think his intention is whether the taxable supply of rupees 50 million should be invested now, right? But what I am saying is it's in some way might be invested prior to 15 September by way of stock, right, or any physical asset. If the taxpayer can prove that by showing his bank statement that is subsequently purchased or purchase invoices, then he will get the immunity. But this task is little bit difficult, I know that. So with that, we'll move to the other question. If undisclosed assessable income of rupees 10 million, what would be the investment? Undisclosed assessable income is rupees 10 million. In fact, the law does not speak about the assessable income. It speaks on income, assets, and the taxable supply. So the assessable income should reflect as investment of any physical asset or as deposit in a bank. So whatever the asset ultimately declared will be the amount qualify for the immunity. Then there is another question posed. Nihal, can you follow that one?
Regarding that director's current account, ma'am.
Yes.
For a company, if there's anything which should receive from the directors, you can consider it as a loan if it is acceptable as a loan. Say director is payable to the company, that has to be certified by the director, and other requirements. I mean, the date of granted that loan has to be confirmed by the director. If it is acceptable as a loan or a receivable amount, as I explained, trade debtors, other debtors also we have to accept as an undisclosed asset. So in that case, you have to prove that we have undisclosed taxable supply and income. So those undisclosed taxable supply and income are so if director is confirming the position, we have to accept it if they are providing required documents.
There's another question is asked. If asset is in family members' name, who have to declare the undisclosed income? So the declaration, who needs the immunity? That is the first question. Who owns the asset? Who owns the asset? the owner, if the owner is different person from the person who is keeping that money, then that means in that sense, he either he could be borrowed or it could be taken as a loan given, right? Or asset vested in other person. So in that sense, the person who have the asset or the money should confirm that he has a money or a loan to be repaid to his other family member, and if it is cash, that should be borrowed from him, that should be taken back from his family member and deposited to a bank now, and he can simply declare it, right? Otherwise, the family member who at the moment having that money, he also can make the declaration under his name. Then we treat that particular monies belong to that the declarant. Then another question is posed: if the trading turnover is 100 million and the investment available is 25 million, to which amount tax have to pay? Already, I think this is that was replied. Then the other question: how accountant value the stock? They are not a professional to value stock. Nihal, can you follow that?
Yes. In respect of trading stock, we are not expecting valuation part. Say, if need valuation part, the taxpayer has to go for a professionally qualified valuer. Here, what we are expecting is because there are three requirements has to be fulfilled by the taxpayer. One is ownership of the asset. The second one is date of acquisition, and third one is the cost or market value of the asset. So in case where the market value is not valued for a person who is called an approved auditor, so in that case taxpayer has to go for a valuation of a professionally qualified value. I mean, say a person who is declaring a gem stock or jewelry stock by a jewelry shop or gem shop, definitely the auditor cannot provide a valuation. They are what the auditor can provide only the details of ownership, or he can confirm the ownership or date of acquisition or the availability of the asset. Definitely taxpayer has to go for a valuation report of the gem or jewelry authority. According to the cases, you have to go for a auditor's report to confirm the cost or market value. If not, all other cases, professionally qualified valuers or independent bodies service has to be obtained to prove it.
Yes, another question is posed: if a person having supply which is not subject to VAT, can he declare the supply only? Now the purpose of declaration is to get amnesty under the VAT Act and to get amnesty under the Income Tax Acts. So no need to declare the supply value if the person is not seeking an amnesty under the VAT Act. But for income tax purpose, he has to get, if he wish to get amnesty under Amnesty Act, then he has to declare whatever the asset he earned out of that transaction. That is enough. Then another question posed: can we claim capital allowance after declare? Now, this Finance Act and the Inland Revenue Act are two different acts. So what we are telling, all the things are under the which is applicable for the Finance Act. In the case of Inland Revenue Act, there are two conditions must be fulfilled for the past assets. That is, must be owned by him and used by him. Then the capital allowance should be granted from that particular period which is started to use, right? So once those applications, those conditions are fulfilled, depreciation is applicable. But then you have to go back. You have to amend your tax returns. So then there will be a confusion between Amnesty Act and the Inland Revenue Act. Now here we are instructing you to take that particular asset to the subsequent year of assessment, right? So therefore that particular issue could be handled under the Inland Revenue Act by getting an interpretation. Therefore I keep away that issue. So you have to write on that. So we will let you know the position under the Inland Revenue Act.
Yes, additionally, the taxpayer cannot defer the claimability of capital allowance according to
For the
the
past
inner
year.
revenue provision. Therefore, sometimes if you have acquired the relevant asset before a certain period, and according to the calculation, if you have done it correctly, now the useful lifetime is over. So in
Yes.
that case, you can't claim it. Say a particular asset acquired before 3 years and still you are having 2 years to claim. So for balance 2 years you can claim, because you cannot start from the year of investment 2021 and start to collect all the capital allowances due for the relevant asset. But if there's any balance, you can claim subject to the provisions of Inland Revenue Act.
If another question posed, if a person has deposited a sum of money on a savings account and not disclosed by opening a tin, can this person declare this wealth by paying 1% under the Finance Act? So opening of tin is important if you want to make the payment under the Amnesty Act. Otherwise, the system we can't recognize the payment who made the payment. So tin should be there to make the payment, and you have to refer that payment details in your declaration form. Therefore, you have to get a tin for this purpose. Then another question is posed, if no bill for stock purchases, how to disclose? We didn't talk about the bill for the stock. We said we asked you to value the market value of that particular asset as at the date of declaration or closer date of the declaration. So you can get the cost of it, and now you know the market value of that particular product. So based on that, a professional valuer can value your stock, right? This is, I think, Nihal replied, no?
Yes, directors the current account replied, for stock purpose, I think we have to obtain the confirmation, especially to prove the date of acquisition and ownership. So if the auditor is not providing those things, if we are in a position to provide bills, we can accept those bills, and depend on the nature of the trading stock. I mean, say there are goods which you can't use for a long time period. So depend on the nature of the items available in your trading stock, we will accept even without having bills. But if you are having bills and invoices to prove the ownership and date of acquisition, it's okay. If not, you have to confirm that two items also through the audit reports.
Here another question is posed, if the declared dividend kept in FD and bank paid the WHT already till the WHT period, is 1% is apply for this fund. Now here he says his source of income is dividend, that is now deposited to FD, and on the FD income WHT also deducted, so need to pay 1% and declare it. No, already it is declared, already the due tax is paid at the point of dividend declaration by the company. then subsequently the interest income also taxed by way of WST. No need to come under the this declaration. Oh, you mean amnesty. The another question is posed for visa purpose. Some people deposited other person's money under their account. Is that also applicable to this declaration? If it is yes, how do we need to mention that in the declaration? So now the question is, who is going to declare it? The person who
Yes.
having the
In that
money
case, I
or
think
person
net asset is zero, no, sir?
who,
Because
yes.
asset is there is an amount for asset, but at the same time they are having a liability for the same amount. So in that case, most probably you may not have any undisclosed taxable supply or income, even though there is an asset, and there may that amount may not be taxable according to the Inland Revenue provision or VAT provision, because it's only a loan
Arrangement.
obtained from, yes, for a temporary period.
And also that is not the money earned by that particular person. No.
Yes, yes,
So he has nothing hidden by him.
yes.
Then another question is, what are the entries for right of NBT ESC penalty payables? How can we disclose undisclosed FD open? There are two questions posed by one person. The first part on the writing off of the abolished taxes. Is it discuss करा दे नहीं?
No, we didn't discuss it.
So that sort of activities will be initiated by the IRD on the person who is in his account according to the IRD records. If there is any areas of NBT or ESC, that sort of matters will be initiated by the IRD, nothing to worry by the taxpayers. And the IRD will send on that a note to the taxpayer. So you will get it in future on that. Then the second question is, can we disclose undeclared FD open before 30th March 2020 in this immunity? Yes, that also that says income earned on asset or prior to 30th March 2020. So if that capital or a interest up to that point is not declared by that particular person, this is the right time to declare the FD and the interest earned by that FD, right? But if on that FD, if there is a WHD deducted, the earning part, the whatever the amount earned by that FD is no need to be declared, but only the capital amount. By declaring the capital amount and paying 1%, that is enough. If a person has fixed deposit, another question, if a person has fixed deposit as at 31st March 2020, can he get a confirmation as at 31st 3 2020 and pay 1% tax, or he needs to redeposit the money after 15/9? No. Whatever the bank confirmation is sufficient as at date of the 31st March 2020 to the principal sum, and you have to pay 1% if you are declaring under the amnesty. But for the subsequent interest income, if it is tax is not paid, you have to pay tax if your income is more than 3 million as per the Inland Revenue Act by submitting your tax return for the year of assessment 2021 and balance periods, right? Then Mr. Nihal, can you go with
Yes.
director's issue?
Yes, here it asking when director withdrawn money from the company can this be treated as an asset. So if it is if the director withdrawn undisclosed income or taxable supply, and if he has not obtained this amount as a dividend, because dividend or the director or shareholder has to obtain profits from the company in the form of dividend, not as other way. So in any other way, if he obtain amounts available in company, it has to be treated as a loan. So if it is a loan, as previously explained, portion is applicable. Company can disclose it if they have undisclosed income earned before 31st March 2020, and the asset is with the director, then director's confirmation should be obtained and then can comply with this law.
So another question is asked, what are the immunities available for any pending VAT advance payments, ESC, WHT? I think he asked about the second part of the Finance Act. Am I correct?
Sometimes some people are worrying about the amounts they have considered as EAC VAT receivable or VAT receivable amounts. So for those things, actually, they have not. There is no application of this one, because those are actually disclosed things. No, I think that may be the question what they are asking.
Another question is asked, what is the importance of date of purchase of an asset under this act? Yes.
Yes, it's a statutory requirement to prove the taxpayer to in which day this you have purchased this one. So it's basically important, because when I am explaining the investment requirement, I have explained that if you have purchased before 31st March to 31st September, 15 September 2021, you can declare those assets in same form. But if you are assets after September 15, 2021, definitely you have to comply with the law. I mean, say you can't purchase movable properties or immovable properties outside Sri Lanka. And depend on the date of the purchase, we can decide your immunity as well, because subsequent earnings after year of assessment 2019-20, commencing from the date of 1st April 2020, immunity is not applicable. In order to get that confirmation, this date is important.
Yeah, I missed a part of the clarification of Mr. Nihal
Yes.
because I wanted to tell the date of purchase is important for an asset. If the asset is already purchased, then for the purpose of immunity, you have to pay 1% on the market value. If the particular asset is purchased as at the date of declaration or closer date, then the amount of that particular, then the value of the particular asset and the purchase value almost equal. So that is another aspect of stating the date in the declaration is required in the declaration form. Then another question posed, can purchases are also treated as an stock but not the closing stock? Yes, now the law says to get immunity, you have to declare, one is declare your taxable supply or income or asset, and the second condition is that must be invested. So if it is in the cash form, you have to invest now. If it is already invested and subsequently sold again, then again invested, so you won't get trading stock physically at the date of declaration, but it is already stocked and sold. Ultimately, you might get some sort of asset or income out of that income you might purchase any asset. So here the important is you have to declare the turnover purchases. You have to tell your in a detailed breakup your turnover. That means turnover for if you need the exemption under the VAT Act only, right? Then the subsequent purchases, if it is done in a formal way, right? Then ultimate profit, and by that profit what you have acquired, right? Those are the things in detail you have to tell. Then at that time you will get immunity from VAT if you declare the full turnover. I think that is what is intended in that question. Then another question is asked, if VAT registered person, he has undeclared property, 5 million property, can he pay 1% from million, or we have to calculate GP? Maybe I think he asks whether he has to pay, whether he is paying 1% on the value of particular asset is enough, or he has to pay on the turnover. Isn't that, Mr. Nihal?
Yes, I also thinking the same way. So in my presentation, I have explained for movable and immovable properties. Even though if you are having taxable supplies or income, the next requirement is investment requirement. After you fulfill that investment requirement, you are having assets. So according to the market value of the immovable or immovable property, you have to pay this 1% tax. I think that is the question they're asking. Doesn't matter whether your undisclosed GP is a different figure or undisclosed income is a different figure. The same amount must be available in the investment, and tax has to be paid based on the type of the asset. According to the market value of the asset, tax has to be calculated according to the provisions of it.
The subsequent questions also a little bit, it says in past, the person declared the assets. That means assets already declared, but did not declare how the cash, how it is financed, I think, no?
Yes, sometimes the source of income may not be declared.
Declared. If there is any possibility, is there any possibility to disclose the cash obtained? Again, I am telling here, the condition to the declaration is you have to declare the taxable supply or asset or income. And the second condition is once you declare that figure, that should be either have been invested in the past or it should be invested now. So this question, cash is, I think the cash is not in the hand, no. Now it's in the form of asset that is already declared. So again, no need to declare it again, no, under this amnesty.
Yes, on the other hand, if the taxpayer has disclosed these things, already complied with the Inland Revenue VAT law and made the relevant tax payment. So nothing to be sought from this act actually, because immunity is granted for income tax and VAT by removing the tax payment penalties, interest, and investigation. So if you have already complied and made relevant tax payment, you don't want to expect anything from here.
The subsequent question also well explained. I skip that question. There's another question. When there is an undisclosed income of a company, but that income has been invested on assets in the name in its directors, is it acceptable for the company investment requirement? Nihal?
No, it's when director withdrawn money from the company can be treated as
That's depend on the transaction recorded in the director current account, how it is happens, right?
Yes, they have to invest as provided by the act. So you can't provide loans and those as an assets if you are having money.
But if the particular asset is owned by the director,
Yes.
director can declare that asset.
Yes.
And come under the immunity.
Yes.
And another question posed, if the husband's undeclared the income is in property is in wife's name and wife is applying for the immunity, is she have to give source of income? If not, is only valuation report is enough. We haven't asked the source of income. So who owns the particular property can declare and pay 1% tax on the market value. The ultimate owner should declare it, right? So legal owner. Here the legal owner is the wife, so she can declare it under the amnesty. Then yeah, then the question is about the intercompany.
Yes. Next one, it asking intercompany balances. I think according to the questions, I think they have already declared these type of asset because that's why they are saying that yes, they have not charged interest. So in that case, if you have not charged interest, it will covered under the provisions of Inland Revenue Act. So if it is, if there is any interest due from the intercompanies, then it's it will cover. It has to be answered through the Inland Revenue provision. So normal provisions will be applied.
Here there is no real cash transaction happen, no?
Yes.
Yes, so nothing to declare it under the amnesty.
And he does not have anything to meet the investment or deposit requirement, so he cannot come into this.
If the asset, another question, if the asset is in stock, I think, are we have to give the detail of the stock purchased? Yes, because you have to give detail for the valuation, and for the value on the valuation you have to pay 1%. Another question that also already replied. Right. In the case of Nihal, can you take that issue?
In the case of National Gem and Jewelry, they don't provide valuation. So from them, I think you all can obtain confirmation in these type of gems and jewelry available. And so here also they provided a method for valuation is a qualified gemologist report. Yes, that's why we have, I have explained in our guideline also, we have not limited the document requirement. So depend on your case, you can provide it. Anyway, you have to obtain a confirmation from Gem and Jewelry stating these type of gems and jewelries are available in your hand. And thereafter, the valuation you can obtain from this type of qualified gemologist.
There's a funny question posed. That is, if the property was purchased in the year of assessment 15-16, this was undeclared property. Is it necessary to declare considering the time bar period of 5 years? Yes, thing is this, time bar provision is there for the ordinary cases. There are cases, willful evasions and all. So that is up to you whether you have to take a risk or not. If you wish, you can declare it. If you otherwise, you can keep quiet. When the Inland Revenue comes to you, then you have to face it. Then the final question, I think, undeclared asset sold on the 10/9/2020. How can I get the immunity under this act?
So at this stage, the taxpayer, the declarant is having cash because undeclared asset has been already sold. So immunity applicable only up to 31st March 2020. the amount available in cash has to be invested as required by the law, and I have already explained it. And whatever the gains or profit derived from the disposal of this asset will be answered through the Inland Revenue Act or Value Added Tax Act. So if there's any gain, say a particular capital asset sold, the gain will be taxed according to the capital gain tax rules. You seek immunity only up to the point of 31st March 2020. The value of the asset available in cash, and you can deposit and seek the immunity up to that point. And whatever the gains you derive from the disposal transaction, you have to declare for 2020-21 income tax return purpose. Is there the question asking whether the department request document for audit for period before 31st March 2020 according to the immunities as I explained for the amount that you have declared and received the immunity under this act. We cannot do any investigation, but officers are requesting documents not only for the purpose of investigation, but to fulfill certain statutory requirements as well. Therefore, information may request from people. But if you receive the acceptance letter as provided by the Act and receive the immunity as in the acceptance letter and according to your declaration, for up to that point, no investigation will be initiated by the Commission.
Mr. Nihal?
Yes.
That is about the inherited property. Can you
inherent yes, inherent properties actually there is no any
not the earnings of the particular person.
Yes, there is no any undisclosed income taxable supplies for inherent properties, and no point coming to this system for the when you